So there's two sides to the deal that the G7 reached. One is a reallocation of taxation rights between nations, and the companies as such, apart from the complexity, will probably not pay much more tax as a result of this, but the allocation to countries will be different. And then there is the second part of this deal that would impose in those countries that participate in the deal a minimum tax of 15%, and clearly that minimum tax will increase tax revenue raised from large multinationals.
Okay, so Janet Yellen said this is going to avoid a race to the bottom when it comes to corporate tax rates, but it still only targets companies that have a profit margin of at least 10%. So is that going to be a wide enough net here, Stef?
I think that this is still subject to further negotiation. So at some point, there were three thresholds. One was profitability, two thresholds. One was profitability and the other was revenue. And then if the thresholds would have been exceeded, 8% of what is called residual profit, excess profit, if you will, would be allocated to markets rather than to home countries. We know two percentages now, which is 10% profitability, and everything over 10%, 20% would be allocated to market countries. But we don't know what the revenue threshold is. In other words, what is the minimum revenue before this new system kicks in? And it's likely that this will be subject to further negotiation.
Stef, I'm curious to get your take on how this might impact companies' internal accounting practices, just your view on that. And then secondly, how soon before we see this starting to come into effect in your own view?
Yeah, very, very good questions, both. So on the financial accounting, certainly both parts of the deal will introduce complexity in accounting. And the second part of the deal, so the minimum tax, is based off US GAAP or IFRS or whatever the accounting system is. But the computations per jurisdiction need to be much more granular than multinationals would do today. So there is increased complexity there. There is increased complexity clearly in the first part called Pillar 1 of the deal. So this will bring enormous complexity. As to timing, assuming that there will be a deal later this year with the OECD and the inclusive framework, because it's really different steps. We have the G7 now. Early July, we'll have the G20. By the way, very interesting to see what the position of China and India will be in those discussions. And then there is the OECD and the inclusive framework. Let's assume that we have a final deal second half of this year. Then the details, really design of the legislation, design of a multilateral convention, a multilateral treaty, will take another while. So I'd be very surprised to see anything before 2024, probably even later.